Last week did not disappoint. The market was certainly moving from the jump, and it caused us to change our plan entirely. Turns out the trap was a bear trap and not a bull trap. Last week shows why we prepare each week and why we must plan for movement to both the upside and to the downside. We had a planned path to the downside, and we didn't see that plan come into play. But we had news about the end to the situation in the Strait, solid earnings from Microsoft and Amazon the previous week, and we broke out from the 755 level and created all-time highs. So we closed out of our SQQQ shorts we mentioned last week, took a small loss, and then now we adjust. I'm the Wall Street Yardie, and this is the weekly market report for the week starting August 10th. I'm gonna get you set up, give you a plan, and help you to stay on the right side of the trend for this trading week. The market has shown us that it only cares about three things. One, the price of oil. And you saw when we got news that the Strait of Hormuz is getting ready to be reopened again, that the market raged on forward. Two is inflation and the price of goods as it affects interest rates and whether interest rates go higher or lower, which brings us into this week where we have the CPI and the PPI reporting on Tuesday and Wednesday. So we're going to get the inflation reports this week, which affects the second thing that the market cares about. And lastly, the third thing that the market cares about is earnings, and company earnings have been excellent through this earnings season. So the economy is strong underneath. We just need to see that the price of oil continues to drop and that inflation doesn't rage higher so that the Feds can keep rates steady or even cut rates going into the fall and to the end of the year. That's what's going to bring this bull market right on back and continue the trend even higher. Flip it to the earnings calendar. The main earnings event is over and we start to transition into a quiet period till next quarter. However, there are a few companies we want to watch this week. I want to see if the AI trade is still getting selective and if there's a rotation to any new parts of the market. Let's start with the data centers and space theme. SpaceX had its best day since pulling back hard from the all-time high. Monday, we get a couple other space themes, AST Space Mobile and a popular one, Rocket Lab, after the close on Monday. Tuesday morning before the open, we get SEC Limited, which is a Singapore tech company that makes money from online shopping, digital banking, and video games. In recent years, it has shifted from heavy losses to solid profits, helped by strong growth in all three areas. SE hit my radar last week as Shopify popped on earnings, giving life to the e-commerce stocks. SE also started breaking above the 200-day moving average, which is a sign of bullish momentum. Tuesday afternoon, we have CoreWeave and Lumentum, which are both AI hardware plays. We want to watch the market reaction to see if the move away from chips is continuing or if these guys signify that there's still strong growth in building out the AI hardware. We wrap Tuesday with CAVA. This is interesting to me as we have recent lettuce recalls, Psychospora, all of that going on. This might be an opportunity to get in on a good company for a low price as they navigate through the temporary blip in the supply of produce. Wednesday before open, we get Nebius, and after close Cisco, an oldie but goodie, but has re-emerged as a key player in the hardware build-out of AI with their cybersecurity and connectivity products. We also get Coherent and Cerebras, which will help round out the AI hardware story. Lastly, AMAT Thursday after close, which is a key player in helping to create and supply chips for the AI race. All in all, this will lead up to NVIDIA in a couple weeks, but should set the stage until then, allowing an opportunity to position for the next move in the AI hardware space. So let's jump to the charts now and talk about SPY and QQQ and what we should be watching this week. I'm gonna go ahead and clean up this downward path that we had planned off last week. As you know, we broke out here on Monday. We just broke all the way up above our 755, and then Tuesday we continued super strong, another 1.8% gain. Then Wednesday and Thursday we paused, right? So let's clean up this path. It's not gonna happen. The other thing I'm gonna do is I'm gonna take off this downtrend line for now that was part of our triangle because it's gotten broken now. You can see here we've closed 6 days now above that. So I'm going to take that one off and we're going to leave the uptrend line here that we have here, which is this diagonal line. And we're going to use that as support. The other thing that we're going to look at is our all-time high here, or this area 755 level, also as an area of support with our 766, which was our upside target from the last several weeks, which we have now broken as well. And it's looking like it wants to be support, but this is just one touch. It's not good enough to be confirmed yet. So we're going to have to see how things play this week. Do we pull back? I'm looking for us to pull back. If you notice here, there's a little gap between Monday and Tuesday. We get that gap fill. As we know, gap areas like to fill in this case. This is just a normal little gap day to day here. So it's a high likelihood that that's going to fill. So if we pull back here Monday, Tuesday, back down to this 755 area, you could see here we're going to start to intersect with our trend line. And this becomes a very vital area for a bounce. So if we get the pullback here to 755 and bounce, that's what I think is probably most likely going to happen here. Now, the thing that will break that or cause that to fail is if CPI comes in a lot higher than expected. If that's the case, we might break back down into this area, and we're going to pay attention to that. But to the downside, I'm thinking 755. If CPI is really bad, then we can look at getting back to our 725 level, but I think that's a little less likely at this point. And then to the upside, I'm really thinking the way the market is moving right now, we'll get back up to 810. So that's 810 to the upside, 755 to the downside. That's what we're looking at for the week. All right, switching over to the Qs now. What we see here, the Qs haven't really broken out. They've just kind of dipped low, and now they're kind of right back in this same range. So we're kind of stuck in this range. I'm watching this trend line here to the upside. As price is approaching it, it can act as resistance. So this could be where the Qs bounce off. So if we get inflation that comes in higher than expected, we could see the reversal right here off of this trend line this week. So we're watching this. The top level of the range for the Qs is 748. We can even call it 750 just for a round number's sake. And then, so we're going to watch that. So if we can break through this trend line, get up to 748, we need to see if we could break through that before we could call this a much bigger move. Otherwise, we're just stuck in this very big range here for the QQQ. So tech is still trying to decide whether it wants to go fully on bullish or if it wants to kind of stick in its range. You see, we have a huge gap here from Monday and Tuesday that probably needs to be filled as well. So coming up here, touching resistance, coming back, filling this gap, which would act as support again, just keeps us in the range. And then to the downside, you know, we have this previous gap here, which is what I talk about a lot, is old gaps become support. So we could see 682 to the downside if we fail up here. And that most likely will only happen if we get CPI or inflation readings from our economy that tells us that CPI or inflation is running really, really high, right? So the market is going to get a little jitterish. It's going to be hard to get more funds in borrowing. And as you know, all these tech stocks need funding to continue their AI build out. The capital expenditures that they have are extremely high, and they're borrowing the money to do so. So if the rates continue to get higher, it becomes harder and harder to get the funds that they need and to be able to service that debt. So that's what we're watching on the Qs. To the upside, maybe 750, but we're really paying attention to this trend line here to see if we could break through that and then possibly break through higher. But we do have some concern, as we do have a gap below that we could pull back to, and that could be our support. So we might get stuck in this range here on the tech trade. It's going to be super important for us to watch the CPI and the PPI reports on Tuesday and Wednesday this week. All right, so that's what I have for you. I'm the Wall Street Yardie. Hope this was informative. Make sure you mash the like and subscribe button, and I'll catch you next week.